It is Thursday. You're watching yet another live broadcast of Market View ERS Text Talk right here on Eswatini TV. I am Nathalie Sitole. Welcome to the program. The Eswatini Revenue Service continues to make great strides in ensuring that tax compliance is a simple and convenient process for you, the taxpayer that is. And as the country continues to embrace digital transformation and improved service delivery, the ERS is introducing changes and improvements to the Tax Compliance Certificate, TCC. Now, among the changes we will be discussing today is the new universal TCC format, the use of QR codes and verification links, and an update regarding tax compliance requirements for offshore transfers. Join me in conversation with the ERS to unpack these developments and what they mean for taxpayers countrywide. But first, our business news. And in our business news, the Company Registrations Department at the Ministry of Commerce, Industry and Trade is now operational after being closed following a devastating fire 2 weeks ago. The Principal Secretary, Melusi Masugu, shared this while giving an update on the progress made to restore operations at the ministry.
The Principal Secretary says the Company Registration Department officially reopened on Tuesday, marking a key step towards restoring full government services at the ministry. He is urging Maswati who require assistance under the department to come forward. He explains that earlier disruptions affected several critical areas, including the Industries and Accounts Department, which led to a temporary suspension of operations and caused a ripple effect across other services.
Lo sikhuluma nje namhla elihlangothi lolubuke kuregister kwetinkampani selubuyile luyasebenza kusukela nguThandi sebayasebenza nje siyawabona nemalayini sive siyeta to register ukuto address lawo ma concerns labanawo ngekuregister kwetinkampani. Cha la asise netinkinga khona ku department yaka commerce lokungiyona isibukele kukhiphwa kwema license etitolo o noma ke leto tindzawo la kuthengiswa khona mhlawumbe kwekutijabulisa khona sitawucela sive ukuthi sisibeketelele nje masinyane siyethemba ukuthi tihlobo tethu lesisebenzisana nato titawusibambisa kuze simo sibuye nganeno.
He further states that at present not all departments are fully operational, with online platforms functioning without major interruption. He acknowledges ongoing challenges within the Commerce Department, particularly in the issuance of business licenses as well as delays in liquor licensing department. He adds that government is working closely with the Ministry of Public Works and Transport and other relevant stakeholders, with teams working around the clock to restore full functionality across all affected departments in the shortest possible time. Reporting, Nelson Ngamandla, Vuminkosi Nzinisa, Mbabane.
The Ministry of Labour and Social Security, together with the National Human Resources Planning and Development, is consulting on the possible introduction of a national skills training levy aimed at strengthening skills development and workforce competitiveness. Speaking during the stakeholder consultations held at the Hilton Garden Inn in Mbabane, National Human Resources Planning and Development Unit analyst Moses Gameta says the process is designed to ensure broad participation from all sectors before the fund is established.
The analyst notes that the consultations are backed by key national frameworks, including the 2026-2031 National Human Resource Development Policy and the ongoing National Skills Development Master Plan. He says these policy instruments must be carefully operationalized to drive meaningful change, hence the engagement with stakeholders to shape the proposed levy.
Siqale saba ne National Human Resource Development Policy le siqala 2026 to 2031. Sabuya developer in National Skills Development Master Plan lesi ongoing right now. So ekhathi ke kule master plan kunalo lapho khona sikhulumisa indaba taka funding, because if asifisi kwakha ama policies elive siwakhe bese akasa implementeke. So one of the reasons ke la sende sayitala ngokuthi asesibuke sitawuxoxisana nalama stakeholders aka HRD lokuthenini licebo lini noma ke lisulini lesingalenda ukuthi sigcine sine fund lesibitayibita sisipheceledi National Skills Development Training Fund. Lapho khona sifisa ukuthi onke lama stakeholders abe part and parcel of it. So sitawachazela namuhla ukuthi yini silwane sinswane le levy nasikhuluma nje nge-training levy even what is that.
Secretary General of the Federation of Eswatini Trade Unions from the private sector, Pendulile Zigalala, described the initiative as a positive step, but stressed that it must be carefully implemented to avoid disadvantaging workers.
If managed well, it will really be effective for us as workers. To an extent, yokuthi kungabi nema administration cost. The percentage of administration cost ingayi kakhulu, but it concentrate more on the skills capacitate kumbe disabled. But lengu going forward, we don't know ukuthi kuma negotiation tables how will it affect us. Will then not employers take that certain percentage bese seyingena ngale vele kule levy? One way or the other, it will affect nase sigma negotiation tables.
Principal Secretary in the Ministry of Labour and Social Security, Makhosini Mdawe, says strengthening skills development systems has become increasingly urgent as Eswatini pursues economic growth, job creation, youth empowerment, and broader national development goals. He notes that a well-structured skills levy could play a key role in aligning education and training with labour market demands. Reporting, Nelson Langamanda, Vuminkosi Nzinisa, Babane.
The Central Bank of Eswatini has announced government bonds to the sum of 350 million Malangeni, fixed at 10%, 10.25%, 10.50%, 11% and 12.25% respectively. In a statement, the central bank states that the bonds are accessible through commercial banks and the Central Bank of Eswatini's Financial Markets Department. The auction date is the 27th of this month. According to the International Monetary Fund, government bonds are a key tool used by countries to finance public spending, such as infrastructure, healthcare, and education without immediately raising taxes. The fund states that government bonds allow governments to borrow money from investors in exchange for regular interest payments and repayment of the principal at maturity. This helps governments manage budget deficits and smooth out spending over time, especially during economic downturns. They also help develop a country's financial markets by creating a yield curve, which is used as a benchmark for pricing other financial assets like corporate loans and mortgages. A well-functioning bond market improves investor confidence and attracts both domestic and foreign investment. And that is your business brief. After the break, we speak to the Eswatini Revenue Service. Stick around.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. This is Market View ERS Text Talk, and moving on with the program. In today's ERS Text Talk discussion, we focus on some improvements and changes in the tax compliance certificate document. The Eswatini Revenue Service is actively encouraging all citizens of the Kingdom of Eswatini to take tax compliance as everyone's responsibility. This is a national responsibility, and it helps in the country's development. And my guests today are Nduduzo Dlamini, Manager Marketing and Communications for the ERS, and Nkosi Mahlalela, Manager Taxpayer Education and Information. Good afternoon, lady and gent. How are you guys doing?
Good afternoon, Mr. We're good. How are you doing?
I'm great. I'll start with you, Nduduzo. What has the ERS really been up to in terms of ensuring convenience for clients while at the same time administering tax compliance?
Thanks, Natalie. Good afternoon to you once again and our clients. Thanks for having us here to talk anything ERS and tax matters. So maybe just to highlight, since we started enforcing the 13 TCC regulations, we've been deliberate to make sure that we do stakeholder engagement, we drive awareness to the public and clients about the TCC regulations which we've started enforcing. But we have been also getting feedback from clients to assist us in terms of what would make it better, what would make it easy for them to use the TCC document. So we have been deliberate to try and make it user-friendly so that it's easy for the clients to use. So what we're going to see or what we're going to discuss today, we're going to be discussing those changes. Kobelengos is going to touch based on what has changed on that tax certificate exactly.
Right. I appreciate the service engaging with clients, not only that, but also deciding to listen and then implement some of the concerns or address them. Kebo, please elaborate more on the changes and improvements made to the TCC document.
Good afternoon, Notsile. Afternoon to our viewers as well. So yes, we have been very intentional in listening to our clients and making it possible to be tax compliant. So one of the changes that we wish to highlight today in terms of the TCC document is the intended use or the purpose that would normally display on the certificate. We have changed that. It will no longer be specific to the intended use that you've selected. Will now just only display tax compliant. For instance, the client might choose motor vehicle registration, they might select tender as a purpose of use. However, it would no longer be displayed on the TCC document. This makes the TCC document really universal. It may now be used in different purposes for as long as it is valid. One of the other changes also is the validity period or the duration. For companies, it hasn't changed. It is still valid for 1 month. But for individuals, we have changed it and extended it to 3 months. So this means now it has now reduced the frequency of our individual clients making the application for a TCC. For as long as it is valid for the 3 months, you can use it for different purposes. But of course, we are still considering in terms of the non-individual or rather the companies. One other change notably that we wish to highlight to our clients is that on the drop down where you used to select the different purposes, there used to be one tab referred to as compliant. We have since removed that. In any case now, whichever purpose you select, the TCC document comes out as tax compliant. So we have since removed compliant as an option to choose or to select when you are applying for a TCC. We also wish to highlight to our clients this one here, the TCC QR code has always been there, as well as the verification link has always been there, but we wish to encourage our clients to utilize this functionality. When you scan the QR code or click on the verification link, the system will then pop up details. You are literally just verifying if the TCC document is authentic or valid. What needs to happen is that the details that pops up when you click, they should be the same as the ones that are displayed in the TCC document. I'll make an example. If you are holding a TCC document for Cebolenkosi investments, when you click or when you scan the QR code, it should be for Cebolenkosi investments, including the validity period or the expiry date. But if now you are scanning Cebolenkosi's TCC and then the pop-up details is not Sile, there might just be some forgery or some problem right there. Do contact the ARS. We are available to then assist and check, investigate what could have happened. So we want to encourage our clients, those that are receiving the TCCs, to always ensure that you scan the QR code to validate the authenticity of the document.
With the QR code scanning and the verification link, I'll take it that this is an attempt by the Eswatini Revenue Service to do away with the likes of cyber fraud and the forgery of documentation. Is that so? Yeah, it is. It is definitely that. Over and above that, it's really saying to the client, you can do your own verification without maybe coming to the ERS, queuing, wanting us to validate if the TCC that has been submitted. Let's say you are going for a tender, then the tender board is going through all the submitted TCC documents to validate if the applicants have submitted valid TCC documents. You can simply just scan the QR code or just click on the link, because now we are sending these TCCs online, so they will be probably emailing them to you. So you might as well just click on the verification link and the details will then pop up. It should just resemble the details that are shown in the TCC document. Then you are good. The TCC is valid. That is tax administration made digital, modernized and simple just for you to do so. My next one is for you. How can clients ensure that they do not experience delays when applying for a TCC?
This one is quite simple. So we do encourage our clients to always check and make sure that their tax matters are up to date. So they should make sure that they have paid, that they've filed and paid in time, so that they always stay on compliant. So maybe from our side is to also maybe remind them that the TCC document is also available online, so which is also an easy step for them to get it. They don't need to visit us. They can just visit our website to be able to retrieve it or download our tax PAL app to receive the TCC document. So it will be just encouraging them, making sure that you make payment in time, then everything should be good. And lastly, they should also keep posted on our social media pages, because we do push those reminder dates for when they should file and pay to make sure that they're tax compliant.
Fair enough. Thank you, Nkosi. Cebo, you've already highlighted some of the changes or improvements that have been made to the TCC documents. Let's come to the regulations. It's 13 of them, right? Would you mind sharing if there are any updates in terms of the regulations?
Definitely not. There has been some enhancements, I would say, and improvements still also from the feedback that we're getting from our clients. I'd wish to highlight on the transaction that speaks to the requirement of a TCC when transferring funds to an offshore account. Since the introduction or the enforcement of these regulations, rather, especially this transaction that I've highlighted to in terms of transferring of funds to an offshore account, the Eswatini Revenue Service and the bank systems have now been integrated. This simply means a client, when transferring your funds to an offshore account, you no longer need to retrieve and manually submit a TCC document to the bank for the process to go through. All you need to do is just follow the process at the bank. Actually, if you are compliant, you won't even fill the additional step in the process. The bank has now been given access to just check your tax compliance. So as they are transferring your funds, or as they are going through in terms of the process of transferring your funds to an offshore account, they can now check that you're tax compliant. And if that's the case, they'll simply just continue with the process. But the only time that you'll be contacted by the bank to then conduct the ERS is only on instances of non-compliance. But also we wish to inform our clients that the ERS is proactive in a sense that even when the system declines your TCC, we have a team on the ground that are able to see those declines and immediately contact the clients and offer assistance in terms of how can you make payment arrangements and assisting you really so you can get back on track and you are tax compliant. So that is what we've done. Maybe just also as a reminder is that for the offshore or the transferring of funds to an offshore account for the CMA countries, it's a post verification. So we don't require a TCC before you do the transfer. It will just be after a certain threshold. But for any other country other than the CMA countries, we do require a TCC even before the funds are transferred. And that is when the bank will just check your compliance. And if you're compliant, immediately your funds are transferred without any problem.
Please remind us, which are these CMA countries?
Okay, we have 4 countries affiliated within the CMA. It's Eswatini, South Africa, Namibia, as well as Lesotho.
Fair enough. Thank you very much. Duduzo, we're about to wrap it up. What would be your final words?
So firstly, we are continuing with the stakeholder engagements. So if we do reach out, please do come attend, because that's when we're able to share these updates and also get that feedback from our clients. And then secondly, it is available digitally, so be able to access the TC certificate immediately there. And then lastly, make sure that you're tax compliant. For you to be able to get your TCC certificate, you should be tax compliant. And then I think the last point would be just highlighting that everything we've discussed here, it is available on our website and social media pages. We will be also pushing awareness just to make sure the difference, to be able to display what is the difference from the old tax certificate to the new one. So they should visit our pages to be able to view that.
We've had quite the discussion here. Kabulenkosi, your parting shots.
Thank you very much, Notile, for having us today. For me, it would just be reminding our clients we are available to assist you to get back on track and be compliant. Our initiative of Sonzela's Kulume is still up and running. Sonzela's Kulume, let's have a conversation about your tax obligations. Let's handhold you and assist you in terms of you being compliant. And again, Notile, I wish to remind everyone in Eswatini to please make use of the QR code that is on the TCC document. That will assist you in verifying the authenticity of the document. Also, you can click on the verification link and you simply just pop up the details and you are able to see if the TCC document is valid. Thank you so much for having us.
Thank you very much, Tebo and Duduzo. The Eswatini Revenue Service is here for you. All you have to do as the taxpayer is Sonzete. Otherwise, that was Nduduzo Dlamini, Manager Marketing and Communication at the ERS, and Kabulenkosi Mahlalela, Manager Taxpayer and Information at the ERS. And we were discussing changes and improvements on the Tax Compliance Certificate, TCC. This is Market View ERS Tax Talk. The show continues after this.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Mbabane. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. Now moving on to our market analysis segment of the show. We are virtually joined by in-house economist Annelies Bia. Good afternoon. Thank you very much for your time. So Donald Trump is ramping up pressure on Iran to rather accept a new agreement, at the same time warning that time is of the essence. I want to ask, if talks do fail, how are global markets pricing in the risk of a breakdown in diplomacy?
Thank you, Notile. Good afternoon to you, and also good afternoon to the viewers at home. So yes, the geopolitical tensions between Washington and Tehran remain a major sticking point in markets. So with the current stance that we've seen coming out of Tehran, where the Supreme Leader there has said, whatever peace deal that is going to be there, Iran is not willing to budge on that nuclear proliferation stance for civilian purposes. So yeah, that's one of the sticking points which we are not sure how it would then stand out and how it would work out. But then, in terms of how markets are pricing this in, there is a fear not in markets, in the sense that markets fear that, as President Trump continues to say that time is running out, we might see a resumption of those attacks, between Iran and all the other countries in the Middle East and the U.S., and we might see, further contestation within the Strait of Hormuz. And we've heard anecdotes coming out of Tehran that even if you take over the strait, that Strait of Hormuz, they may actually go down for those fiber optic cables, which drive quite a huge amount of the global internet flow. So yeah, markets are really edgy on that. So if you look at the futures markets in the US, for example, it is showing signs of being wary over that stance that came out of Tehran. If you compare the figures that we had at close, the Dow Jones Industrial Average was up 645 points. The Nasdaq Composite was up 399 points, and the S&P 500 was up 79.36 points. Now, that was largely driven by the fact that we were not getting this rhetoric coming out of Tehran. No, the markets were at a phase where we're thinking that we are heading to a peace deal, as Washington had actually, announced that they were a bit at ease with the new presentation or the new proposal that Tehran had sent. And then we also saw that markets then were starting to focus on the earnings, where we saw the likes of NVIDIA, just posting very beautiful earnings, and their forecasts remain very beautiful. So we're seeing that jump within those tech stocks and those AI stocks. And then we also had news coming out of the White House in terms of some $2 billion that's going to be injected into the quantum computing space. So all those stocks that actually did pull up markets in terms of trade in the US. And then when we move on to London, we can see there's a real-time reaction to the news coming out of Tehran. So we're seeing markets losing 62 points. In London, we're seeing Frankfurt there losing 166 points, and then Paris has lost 51 points in today's trade. So now that is largely driven by the fact that there is the news coming out of Tehran, and then also the economic news coming out of the Eurozone are not that much promising, with manufacturing data in London showing some signs of depression. They're showing that firm output is decreasing, month on month. And then in Germany, we have fears of stagflation. And then in France, again, there are issues to do with those with the debt levels and getting the French economy going. And then coming into Asia, the Nikkei there, we can see that it's rallying, against the backdrop of an improved tech stock environment, and the fact that, the news that are coming out of Tehran, actually came out after close of the Asian markets. But then as well, what we are seeing is the fact that we've not seen any bombardments, and the tech stocks are really doing well. But when you come into Hong Kong and the mainland China, there we can see a bit of a depression there, with Hong Kong losing 264 points in today's trade. Shanghai losing 84 points in today's trade. Now, that is largely driven by the fact that when you look at the fundamentals within the mainland in itself, there are issues to do with shrinking output, firm output, and the markets are waiting and steadily looking at what type of stimulus is going to come through and what liquidity assistance is going to come through from the central bank and from the central government there in China. And then coming into South Africa, what we're seeing is markets dipping 975 points in today's trade. Now, that is on the backdrop of a poor or lackluster performance within the miners there, and that's actually also signaled in the price of gold. But also, when you look at other precious metals, we can see that those ones are retreating, and also some industrial players also not doing very well there in Johannesburg today. Then coming into Eswatini, we've not seen any movements. And then moving into the commodities, gold has lost a bit on today's trade, losing 20.5 points, staying at $4,514.80 per ounce. And the price of Brent crude is up to 107.40 per barrel. So now the story around gold is driven by the fact that we are expecting interest rates to start increasing as long as we see these geopolitical tensions moving. And that is actually being signaled in the 10-year bond yield and also in the mortgage rates that we're seeing coming out of market. So banks have already priced in an interest rate hike, and then we're seeing that shift and to those interest-bearing assets, and then coming into the currencies because of that uncertainty with the news coming out of Tehran. The Lilangeni is weakening overall against all major currencies, but at a relatively stronger position than we were at the start of the week. We're trading at 16.56 against the dollar, trading at 19.21 against the euro, and one Lilangeni can get you 9.65 Japanese yen. And now that's also on the process where we're seeing a shift towards safer currencies and moving away from emerging economy currencies there to get that stability and that safe haven protection from those strong currencies. Thank you, Notile.
Thank you very much, Mr. Sibia, in-house economist analyst Sibia, showing insight on today's trade. Otherwise, this has been your weekly dose of Market View ERS Text Talk from myself and the team. Let's meet again next time. Bye-bye.